Hey everybody, thank you all out there. It is a very strange and unusual and nervous time, but I'm going to dig through all the key factors that we all should be aware of, because if you go to Twitter, if you go to YouTube, pick up a newspaper, it'll tell you the world is ending. So let's just jump in, and please, Sanjay and I worked on this since late last night, early this morning, since 6 a.m. So thank you for helping support us. That's all we ask. But there is a lot of work that goes on behind the scenes. And I'm glad you all appreciate it. So this is going to touch on a whole bunch of stuff. As usual, I try to find patterns on things and interrelationships and identify who we can trust and who we can't. So this is going to touch on the last 48 hours and the next 48 hours. It's going to touch on macro, the Fed, banking system, banking insurance system, crypto, top players, how they're interrelated to everything else, and so much more. I don't even know how many slides there are today, but I guarantee you there's going to be 40 nuggets. So let's go. And of course, none of this is financial advice. And the story really, it's not just a Silicon Valley Bank problem anymore. It's not just a Silvergate problem anymore. Last night around 10 p.m. my time, stablecoins hit the wall. I was like, oh my God, what's happening? What is this? Contagion, these cascading effects like we've seen before. What is the flight to safety? So many questions over the last 48 hours. Also from people that run big enterprises, that have money stuck in SVB, that have money stuck in other regional banks, that are really, really worried. So everybody is freaking out. So let's jump in and try and look at things in a very rational, data-driven way. Not saying we shouldn't freak out, maybe we should, but wait till the conclusion at the end. So first of all, Cascading Liquidations, this is on Bloomberg, and Bloomberg are some of the biggest fearmongers these days. SVB fallout spreads around the world as UK firms plea for help. This one was about, on Saturday, the leaders, I think the UK Chancellor, Jeremy Hunt. So for all the Brits out there, hello everybody. They met with roughly, apparently, or 180 tech companies apparently sent a letter to the Chancellor. I'm not sure of the exact details, but they were worried about the loss of deposits that they had, and it's going to cripple their whole technology startup ecosystem and could set the UK startup industry back 20 years. Many businesses were sent into involuntary liquidation over the last 24 hours. And the UK is just the beginning. Silicon Valley Bank also had branches in Canada, China, Denmark, Germany, India, Israel, Sweden, and many more probably. That's all I know of. And founders are warning that the bank's failure could wipe out startups around the world without government intervention. So a lot of people are extremely nervous. And thank you, Glenn Johnson. But when you listen to those words, you go, oh my God, the world is ending. And then you have people calling it an extinction level event. Heaven forbid a meteorite would hit the earth. But this is what, a lot of top people in Silicon Valley were talking about. David Sachs and others. They said this is worse than C19. This is worse than the Lehman moment that triggered the global financial crisis. So a lot of people are saying this is extremely serious. And I was like, oh, damn, as if we haven't been through enough in 2022. I thought 2023 would be a little bit better, but let's dig in more. So first of all, back to SVB. I did a very detailed video. I'll add it here yesterday on the whole crisis. If anybody is interested, it's actually been my best viewed video so far this year, and it's about banks. So that shows you how nervous people are. But nearly half of all US venture capital backed startups were involved with Silicon Valley Bank. They were, typically what happens in Silicon Valley, you raise a round, and your VC will introduce you to the ecosystem, your law firm, your bank, etc. And they're all set up. And that's who you have to work with when you get money from the VCs. So it's very much orchestrated. But what happened, though? You've got people, this guy, Gary Tan, CEO of Y Combinator. Y Combinator is probably the best incubator of all on earth. And he spoke about, again, there are 130,000 VC-backed companies. 65,000 of them are on Silicon Valley Bank. And I shared the list of all of those people that have money on Silicon Valley Bank on Patreon this morning. And it has a who's who of who's on there. Names like you wouldn't believe. We'll touch on some of them in a minute. So a lot of people are saying, Hey everybody, quick hand, thank you so much. A lot of people are saying Silicon Valley Bank needs a buyer this weekend urgently, so people can get back to business on Monday, or else thousands of companies could be in jeopardy. And this is from the information of bank executives on SVB fallout. They could be 2,000 times better if a buyer comes in this weekend. And obviously there's a lot of pain, a lot of problems. There's a lot of other community banks as well that are afraid of a spillover. This article touched on the CEO and CFO of some bank in Missouri saying they are also concerned. They're concerned about FDIC insurance running out. They're concerned about a run on their bank. Everything is in a difficult situation, as I covered yesterday. Everybody got involved in long-term bonds, so they can't cover short-term withdrawals because they're locked in for 10 years. And if they sell them now, they're going to lose 20, 30% on the value of those bonds. So if anyone's interested in learning about that, I covered it yesterday. I won't spend any time on it today. So an offer just came in for Silicon Valley Bank. And remember, that was the 16th biggest bank in the United States. Jefferies popped in and offered 70 cents on the dollar. I'm not sure exactly what that is right now because you've got to look at assets less liabilities. They're only going to pay 70 cents for the assets. They're not going to incur any liabilities, and they're hard to figure out. So according to Sanjay, big thank you for sharing this with me. This is sketching out the worst case scenario and factoring in the $45 billion bank run before the FDIC put Silicon Valley Bank into receivership. And per this, if you look at the numbers real quick, their number really matters. The TLDR is the recovery is about 78.71%, i.e. 80 cents on the dollar. So somebody offering 70 cents on the dollar is chopping their knees off. Not good. But the important thing, the reason I'm sharing this is the fact that, okay, there are already offers coming in on a Saturday, a rainy Saturday in California, and they're getting 70 cents on the dollar. So that means all is not lost, everybody. Yes, if you had $1 million and you lost 300,000, you still got 700,000. It is terrible. It is awful. But at least there's somebody willing to keep this thing operating and keep those startups afloat. Now let's talk about where banks go to die, part 2. I talked about part 1 yesterday. But if you look at all the banks that hit the wall, that went bankrupt, that fell into receivership over the last couple of decades, you've got names some of you may know: Travelers, Citicorp, Banamex, Washington Mutual, US Trust, Summit Bancorp, etc. You can see they all kind of roll into one of 4 players. Citigroup tends to adopt a lot of big ones. JP Morgan picks up a lot of other assets too. And then Bank of America, and then Wells Fargo at the bottom. A lot of those names like, Wachovia and Fleet Boston Bank, and you name it. All the names become very, very familiar over time. And everything is kind of consolidating into these big 4. So it would not surprise me if one of these big 4, probably JP Morgan, ends up picking up Silicon Valley Bank. I don't know if Jefferies will do it, but at least it's good to kind of light the fuse. Okay, offers are coming in. They're desperate to take something. So who knows? Sometimes the early bird catches the worm. Sometimes they just get outbid. Somebody will come in and offer 71 cents, 72 cents, up to that 78, 79 cents as we go forward. So let's talk about the people that actually have money stuck on here, the companies, the pension funds, etc. This is super interesting when you look at some of these names. Obviously, Roku, maybe $500 million sitting there. You have BlockFi, nearly $250 million there. That is kind of stunning. BlockFi, well, that's comforting to those that are owed money by BlockFi, that there is money sitting there, but now that money may be at risk too. Circle have about 3.3 billion. We'll talk more about those guys in a minute. Roblox, 150 million. Ginkgo Bio, 74 million. iRhythm, etc. Rocket Lab, it's tons of big names. Again, the whole list is there. And it's stunning to see how many companies actually have money there as well. So back to the government. Janet Yellen is monitoring things very, very carefully. And she believes, it's a concern, but everything is well in hand because the regulators are on top of things. So anytime we hear everything is fine, we know it's not. And also she was in the Ukraine. I know it was a week ago, but what was she doing in the Ukraine? It's like popping out her checkbook to fund a war or something. Nobody understands why she was there. Maybe there's another situation at play. I don't know, but I believe these politicians should be fixing stuff at home first before they go overseas. Anyhow, speaking of another guy, this is JP. They are holding an emergency meeting on Monday to discuss everything that's going on. Clearly, they broke something. Two big banks went down. Different reasons, I understand that. But for two big operations to go down in a very short window of time, and it appears that maybe Jerome Powell and his Casio calculator from the 80s isn't working very well anymore. Let me explain why. So here you can look at the history. And again, thank you, Sanjay, for sharing the history of peak Fed funds rate, the hiking cycles, and actual inflation. And history says we are long done hiking rates. And if the market and consumer inflation expectations are correct, monetary policy is, by all means, restrictive enough relative to history. That's basically what that table tells you right now. They've jacked enough. This obsession with 2% where it's never been there for 40, 50 years of my entire lifetime is ridiculous, but now things are beginning to break. And we knew things would break. It's beginning to happen. The question is, how bad can it get? And that's what they should be concerned about too, especially with liquidity. And the Fed as well, they have issues of their own. This is the Fed Reserve Weekly Remittances Treasury, and you can see it is very, very, very negative. The Federal Reserve, per Lynn Alden, their operating losses are now 40 billion, which they kind of call deferred assets, which is kind of weird vernacular for a deficit. Anyway, they can use any terms they want. But this minus 40 billion is growing by at least 20 to 40 billion a month, which is stunning. It's exploding. So not only are they hurting the markets, but they're also hurting themselves. They're exploding the deficits. The interest on debt is blowing through the roof. And yada yada. It's the same stuff I've been saying for a long time. Anywho, are they out of ink? This is a cool little meme somebody sent me. They're not running out of paper, but they could run out of ink. And a lot of people believe the printer is coming. The pivot is coming. We'll see. We don't know. Nobody has a crystal ball. We don't know how bad this will get. But there are issues that the smaller banks are worried about. And if you look at this, you can see 1/3 of deposits in the United States are in small banks, and 50% of them are uninsured. Haircutting the Silicon Valley Bank depositors will raise sensible questions about holding deposits at any bank right now. Small, medium, regional, large. Everybody I know that has substantial dollars, especially over $250,000 in cash sitting in a bank, they are pulling it and they are distributing it and they are pumping it into places that they would never normally do because they are worried about the banking system. Okay? And it doesn't take a lot, to drain that 3% of cash on hand compared to the 100. If you imagine 100 trillion in assets, 3 trillion is what they have in hand, or 100 billion, 3 billion. That gets drained so fast, as we saw. It doesn't take a lot to trigger a bank run in this day and age. And in addition, the run on small banks becomes a big bank issue. Small banks are typically in worse position than the big banks. Here you see the small banks have about 6.8 trillion in assets and only 680 billion in equity. Large banks have 13 trillion in assets and 1.5 trillion in equity. Again, a small fraction. This is the whole fractional reserve banking problem we saw. And the risk of a run on thousands of small banks makes this a Main Street problem. And as Nick Bhatia says, from big picture perspective, the systemic risk has always been at the commercial and investment banking layer, both onshore and offshore in Europe, etc., and not the US government debt to GDP. The bubble in treasuries is not the problem. It's the banks are the problem. And this is where liquidity dries up and things are breaking first and fast and making everybody nervous. So I guarantee you got a whole bunch of people giving JP a call saying, hey, dude, come on, time to fix things. In addition, let's dig into some other angles. This is where it gets kind of interesting. A lot of people are now blaming Peter Thiel for the run on the bank. Some say he triggered the bank run on Silicon Valley Bank, where his founders fund and a lot of the companies he invests in parked their money. But in fairness, they did have LPs, limited partners, who did have issues pulling from Silicon Valley Bank, and he is smart. He raised the alarm. He said, everybody, jump on the phone, the whatever, Chinese whisperer, whatever it was, get your money out. And that all happened in a very short window of time. And there was a lot of money that was pulled out. And of course, everybody tells everybody, it spreads like wildfire, and the place is drained in like 48 hours. And that's exactly what went down. So let's talk about this guy, though, Peter Thiel, because I did talk about him on my Bitcoin conference recap, April 7th, 2022. Peter Thiel went after the gerontocracy state, i.e. people 70 plus or geriatric age or whatever he said. I don't remember the exact word. And he thinks that the government needs a revolutionary youth movement and that embraces Bitcoin. And he also attacked central bankers, including Jerome Powell. So he is probably an enemy of Jerome Powell. And he said Jerome Powell has chosen to ignore some of the big changes in the world and what can be expected for the years ahead. But he also said people like Jerome Powell should be grateful for Bitcoin. And this is the last warning he is going to get. So when you break that down, he's attacking everybody, all the leaders of the country, Jerome Powell, etc., and saying, you should be grateful for Bitcoin. Last warning. So I'm thinking about these words all last night. It's like, he said that in April 7, 2022. Could he be the one lighting the fuse for all of this? I doubt it. But the interesting thing about this, though, is he was talking about Bitcoin and Bitcoin being so great and wonderful at the conference in Miami, and he sold at the exact same time at the top of the market. And that, again, goes back to you can't trust anybody. This is my list. I have a very comprehensive list I've been building since 2017 of who owns all the Bitcoin. And per this list, you can see it's line item 116. That's where I had Peter Thiel, and I had him pegged at 30,000 Bitcoin because I tracked his purchase about 8 years earlier. I think he picked up some Bitcoin from the FBI or something, and CIA, I can't remember. But it proves a couple of things for it to be extremely accurate, this list of who's who. That's why Bitcoin's so scarce. But he did sell it. He held it for 8 years, sold it right before the Bitcoin conference or right after. Not sure the exact day. But if you look at his web of influence, this is also very interesting. Here you can see, oh, by the way, I don't know if I included it here. I forgot to include it, but there is a Financial Times article that says Peter Thiel netted 1.8 billion at the time where he sold it, where Bitcoin price was 60,000 approximately in March. And if you calculate that out, that is exactly 30,000 Bitcoins. This list has been pretty accurate. I forgot to add that Financial Times article in this thing. There's so much to share. Anyway, back to Peter Thiel. The web is kind of interesting. And when you dig into who is actually in control of the country and why he would say such bad things about government officials, well, you can see all of the connections around here, the history of PayPal, connection to Elon Musk and Tesla and YouTube, Sequoia, LinkedIn, Greylock, Facebook, Yelp. And then on the political side, his partner, Matt, I think he runs Thiel Capital, who are connected to the White House indirectly, etc., etc. Peter Thiel was part of the Trump transition team. So obviously they are aligned with one different political party than the one today. And that could be part of it. But the point is, the only thing I care about is when people kind of pump something and then they're selling it at the same time. It's just a bad look. And Palantir, most importantly, is what Peter Thiel founded. He founded this, I think, in 2004 between him and some PayPal alumni. And Palantir cut its teeth working for the Pentagon and the CIA in Afghanistan and Iraq. And these guys know everything about you. They know who your partners are. They know your medical records, your credit history, your employment history, your court appearances, your criminal records, where you buy fertilizer or coffee, etc., cell phone records, airline records, social media postings, etc. They scan everything, and that's what their spider web looks like. So, interesting company. Anyway, back to business. We're going to switch gears and talk about stablecoins because these guys got rattled since 10 p.m. last night. And this is a screenshot from just about an hour and a half, 2 hours ago. And just as an indication of how screwed we are, but hang on, there's good news. Don't freak out just yet. But this is a list of all the top stablecoins. And out of all the top 14 stablecoins, only Tether, which some people say is a ticking time bomb, and BUSD, which is going away very soon, are still pegged. All other major cash algo stablecoins have significantly depegged, and the exposure is systemic, just like potentially with the banks. And is there anywhere to hide? That is the question. When you look at this, it's terrifying. But USDC, there was a freak out. This is how bad it got for a few hours. And I know a lot of people out there were kind of saying, what do I do? I'm holding a lot of USDC. And everybody thought USDC Circle was the safest stablecoin. But look how far it fell this morning. At 3 a.m., it fell to 82 cents on the dollar. And if you're holding a couple $1 million in these, that hurts. For that type of dip to happen in the space of a few hours, it shows you nothing is safe out there, everybody. Everything is dangerous. Investing is a blood sport. And even when you think you are holding something that is safe, and it falls so fast, so hard, because something happens to some bank on the West Coast, it's stunning. So that's why it's very important to understand the spider web and how everything is interrelated, so you can get a better handle on risk management. That should be the story for today. But Jeremy Allaire came out and he gave the market some confidence. In fact, if you look at this chart, you can see the way it bounced back up to, when I took the screenshot, 97 cents on the dollar. And that's a big improvement just in a few hours. But there was a lot of people doing other stuff. But Jeremy Allaire, and kudos to him, Jeremy, if you're out there, good job. He came out and he tried to calm the market. The TLDR of the letter that was put out an hour ago is, while USDC can be used 24/7, 365 on chain, issuance and redemption is constrained by the working hours of the US banking system. And these volatile times drive a lot of churn through the actual platform. So USDC liquidity operations will resume as normal when banks open on Monday morning, and that's about 6:30 Pacific AM, I think. And as a matter, our teams will be well prepared to handle significant volume. And he says, as a regulated payment token, USDC will remain redeemable for 1-to-1 with the US dollar. So take everything you hear with a grain of salt, but don't freak out. I do not advise selling your USDC for 82 cents or even 90 cents on the dollar. It should come to fruition. It's just a time issue. Then Elon Musk came out and tweeted this, and of course probably freaked everybody out a little bit too. It's like on the left, there's two buttons. Crypto is a scam. Keep money in banks. And on the right, banks are a scam. Keep money in crypto. What to do? It's funny because this is exactly why things like Bitcoin exist. Because of banks and how flaky they are and how much money printing happens with the Fed and other economies around the world. And that is the whole message of where we are today. Let's look at Bitcoin and stablecoin. And this is a really neat ratio I look at a lot, and I was looking at a lot today. This is the stablecoin divided by Bitcoin exchange balance. I add a little green arrow on the bottom right-hand side to show you how it's shot up and to the right. That means people are trading their stablecoins for Bitcoin. That Bitcoin is the flight to safety we spoke about for the last 2 days for now. And let's look at the Bitcoin chart, because this is kind of telling right now. And I look live, Bitcoin is at 20,500 on the nose. And I kind of just wanted to put together a little history of events so you know exactly what went down. First of all, in the bottom left corner, Silicon Valley Bank hits the wall, freaks everybody out. You know, that type of contagion isn't good. All risk assets went down. All banks went down. All tech stocks pretty much went down with the exception of one, beginning with T. But what's interesting is where we dropped to. Bitcoin dropped to about 19.5, 19.6. And then it bounced. And this is exactly in line with when people started swapping their stable coins and other things, maybe other assets, into Bitcoin. Bitcoin dominance went up a little bit, etc. Thank you, RustyBot. But then it shot all the way up to over 21K, and then came crashing back down again for, reasons, for fear of contagion and everything else. But here we are, right where I put that second red arrow is when the USD peg happened. And then Bitcoin started gradually going up again. So we're in this little bit of an ascending channel. It's been a rough week. Everybody must be tired. Hold tight. I think Bitcoin is very important to hold that ascending channel. Keep above that 20,300 level for now and just keep on creeping forward. But if all the problems with stablecoins goes away, people might move back. But then again, people may not. People may still reduce their balances on traditional banks, move to some type of safer asset. They may not trust stablecoins anymore after what happened to USDC. I am not sure. The question is, thank you. Is it Bitcoin bunker time from Jack? Sent that to me. I thought it was very funny. This is actually a real bunker. I doubt it has the Bitcoin branding on it, but there are apparently 5 of them. I can't remember the guy's name. Vincent Cesaris or something. He's built 5 of them all around the world where they actually store billions of dollars of Bitcoin on behalf of people in a very, very secure manner. So wrapping up, and sorry, it's just so much to share because everything is connected. There's nothing that is not connected, and that's the big message from this. If we look at this beautiful, beautiful text from Dr. Jeff Ross, who is a Bitcoiner, hardcore. He said the plan: 1, Operation Choke Point, we've discussed many times. 2, devastate regional banks, venture capital, stable coins, and crypto without any chance of bailouts. That's the phase we are in right now, ladies and gentlemen. Potentially step 2. I hope it's not as bad as this tweet makes out. 3, chastise the above-mentioned entities for being too risky for retail investors and make examples of them. Before we get to step 4, I'm on the receiving end of a lot of fear. People have just been hit, and they get so nervous. And now everybody's saying, I just want to hold cash. I can't deal with markets and risk and banks and crypto anymore. It's just too stressful. But maybe it's a plan to make people do exactly step 3 here. Chastise the above mentioned entities for being too risky for retail investors and make examples of them. Take everybody out of the system. Leave everything up to the big 4 banks like I talked about 30 slides ago. And step 4, introduce central bank digital currencies as the much needed risk-free alternative. Again, tinfoil hat, well assembled. Dr. Jeff Ross, you're like, if you told me that 2 years ago, I'd say you're crazy. You tell me that today, I say you're probably 60% chance you are right. Something funny is going on. But at the same time, everybody, keep your BS asymmetry principle in place. This asymmetry principle, known as Brandolini's law, states that the amount of energy needed to refute BS, I won't say the bad word, but it's the stuff that comes out of cows, is an order of magnitude bigger than what is needed to produce it. And this is the power of fake information, misinformation, fake news, all that type of stuff. And it's also similar to what I call the 2% toxic principle. It's the toxic 2% that spread all of the toxicity, and 98% of people don't. So again, I thought that was interesting. So conclusion. This is kind of the money shot here for you all, ladies and gentlemen, as we leave, based on numbers and activity over the past few hours. Again, the last 3 hours, so much has changed. I was going to record this earlier, but stuff kept on dropping in. Jeremy Lair had a calming influence on USDC. Now the peg is back to 99 cents on the dollar, which is really cool. Wall Street offers are coming in for Silicon Valley Bank, for example, Jefferies. This could actually calm the contagion for regional banks. And of course, remember, Silicon Valley Bank was a big bank. And I just hope Contagion doesn't fall next week. We're already seeing the bond market talk about Fed expectations way down. It's 25% chance at 25 basis points. The 50 basis points is gone. It could even be 0. Who knows as we go forward. But hang tight, everybody. Don't freak out. You know, what's been quite impressive is Bitcoin has been so resilient as well. And I want to thank everybody here in the chat. Sorry for that longer than normal Saturday video, but half an hour is a lot of stuff to get through. And thank you all as well for all the donations. I'll see you all tomorrow for the Sunday Q&A. And Monday is DCA on Rand's channel too. So thank you all. Have a good weekend. And I'll see you all tomorrow. Bye.